Meantime, software company ServiceTitan going public with a bang earlier this month. They were on our show in the morning. The company popped 42% in the first day of trading. Renewed anticipation for other IPOs is now emerging for the first half of 2025. Join us right now with more on what looks like an IPO window. CEO and co-founder of Fundrise, Ben Miller. Fundrise's innovation fund helps retail investors get a piece of companies like ServiceTitan before they go public. What are you expecting, sir?
Yeah, I mean, it finally happened. We've been waiting a couple of years. The Fundrise created the innovation fund to democratize investing into private tech companies with the idea that this suite of private companies were going to go public. And what we're seeing so far totally validates the model. We saw ServiceTitan pop 44% in a single day. I think that's a green light for the entire IPO market.
What I worry about asking you this question is a little bit like asking a barber whether you need a haircut, like whether this is really, because this is your business. There's been a big question about whether these companies would go public, whether there's going to be an exit for a lot of things. The private equity industry, venture capital, they desperately need this to happen. The question is, do you think that the valuations that a lot of these companies have are still too high? Is that what's been preventing this from happening?
The venture market has transformed so much over the last 10, 15 years. I mean, I run a tech company, and being public is no longer something you really look forward to. You can now get as much or more liquidity in the private markets. So there's really no reason to go public anymore. You saw Stripe, you saw Databricks, you've seen OpenAI do these multi-billion-dollar rounds without going public. So the real question is, why would anybody want to go public? And it only makes sense if the public market's going to reward you. And we finally saw that the public markets they rewarded ServiceTitan. We invested in ServiceTitan more than a year ago and saw a 50% pop. And I think that's the kind of sign that the private companies have been waiting for. Because otherwise, being public is just, there's so many regulatory issues. There's everybody's trading your stock, and it's just there's not that much benefit to it unless you're going to get rewarded.
So I have a question about how Fundrise actually works, Ben. And, you offer liquidity, which is one of the key advantages of investing in this way, quarterly liquidity. And I'm wondering how you mark the value of the investments on a quarterly basis when these are private, long-term investments.
Yeah, so we created the first venture fund that anyone could invest in. We had to go to the SEC, work with them. It's a new model. The challenge is that private markets previously have been gated. Only institutional investors and high net worth investors could invest in it. The model is a kind of a hybrid of public and private. The fund holds some liquid public stock and also private companies. Typically, we mark the company where their last fundraise has been. So if they raise money at a $1 billion valuation, that's where we would mark it. Otherwise, it's really difficult to actually know how to price something. And so the marks happen more irregularly than the public markets. But the point here is that these companies that are waiting to go public or are mature are so high quality, they're so mature. I think that doesn't make any sense for ordinary individuals not to be able to invest in them. And what we're seeing and what we've done is we've validated the model.
In terms of industries that you think have a great opportunity in this environment, is it just all tech stuff, or do you think it's actually there's other places that are sort of less exciting that will actually come public?
I think that's outside my expertise. I know a decent amount about tech. The AI revolution is transforming every industry. We've invested in AI and sort of the picks and shovels data infrastructure that supports AI. But I'm sure there'll be lots of change, good and bad for the market.
How concerned are you on the AI front, by the way, that some of these companies ultimately get disrupted themselves by AI? We keep talking about sort of the moat around these businesses and whether there is one.
The companies we're invested in are so successful. I think that you've heard Satya from Microsoft say this, that the first 2 or 3 years is a land grab. And once you sort of have that market share, at that point, it's difficult when you're in the middle of a paradigm shift. So we've seen a handful of companies really break out, like OpenAI, Anthropic, Databricks, and I use their technology. We're a customer. We're a technology company that uses their products, so I have a good sense of it. I don't think that's the risk here. I think the risk is more, how does AI affect individuals, their jobs, the country? I mean, it's going to have a huge impact, and I really think we're having a hard time imagining it.